Hey guys, and welcome to the Working Money Channel. Monday bloodbath. Were you guys expecting this? Over $110 billion was wiped out from the crypto market in the past 24 hours. This courtesy of Watcher Guru, and you guys can see by the heat map, everything has pretty much gone down. Bitcoin's gone down, altcoins have gone down. But Bitcoin hasn't actually gone down as far as altcoins. Altcoins are the ones that have lost most of their value. And guys, we're still holding up on the Bitcoin chart. This is Bitcoin on the daily. Right now, one Bitcoin is going for roughly $92,300 per coin. But this is the level, okay? This is where we saw Bitcoin wick down back on January the 13th. The lowest level that we've seen in the last little while, $89,000. So we're still holding up above that. As you guys can see, yesterday was a very red, negative, bearish day. Bitcoin, though, recovering by a little bit as I'm recording this video. So here's the hourly chart, and you guys can see over the last few hours now, Bitcoin is recovering. But really, guys, crypto sentiment is, I guess maybe I could argue that it is at an all-time low this year. Market cap is down by 5% and volume is also down. You guys can see everything is slipping. Fear and greed now back to 29. So this means potentially a good time to accumulate more if you guys are interested. Of course, that is not financial advice, but these are the times, guys, when the market is in fear, you get greedy, and when the market is greedy, you should be fearful. That is a classic quote from Warren Buffett. I mean, I'm paraphrasing. Bitcoin dominance is climbing too, guys, at 61. So check this out. Within the last 24 hours, even though Bitcoin is down by 3.59%, most of the other altcoins are down along with it, and that is what's giving Bitcoin its dominance at the moment. XRP down 8.5% in the last 24 hours. We've got Solana, that's down 13.8%. Some of the cryptocurrencies that have gained the most within the last, let's say, month or so are down a little more just because we have seen more money pile into those particular cryptocurrencies. But, looking at Bitcoin, we know because Bitcoin is still holding up proper support here, we are not actually in a bad state, even though it feels like it at the moment. Let's take a look at Bitcoin dominance real quickly. So Bitcoin dominance, as you guys can see, is going up. We can probably get a better sense on the weekly. So that's the weekly chart for Bitcoin dominance. And so looks like trend is going up. We need to see this trend hit 64 or at least double tap 64, I think, before we see the market going down. That is a possibility. I mean, really, the ultimate goal is for Bitcoin dominance to come back down here. That's when altcoins will be pumping. And hopefully that is when you guys are thinking about cashing out. If you don't have a plan and are wondering what I'm doing, you can follow me at patreon.com/workingmoneychannel. That's where I'm outlining my crypto trading journey, letting everybody know what I'm doing, being completely transparent there, and letting my subscribers know, again, what I'm doing in real time. Crypto sentiment sinks to extreme fear as Trump says tariffs are still on. So this could be the reason, guys. Crypto market sentiment dived to extreme fear after U.S. President Donald Trump said 25% tariffs against Canada and Mexico are still on the schedule. Crypto sentiment has nosedived over the past 24 hours along broader markets. So it's not just crypto, guys, it's broader markets too. Trump says the tariffs are going forward. The crypto fear and greed index, which rates market sentiment out of a total possible 100, fell to 25. And, I guess it's gone up by a little bit, considering we are seeing it right now at 29. The market drops comes as Trump said at a February 24th news conference with French President Emmanuel Macron that his planned 25% tariffs on Canada and Mexico are going forward on time, on schedule. Trump first unveiled the tariffs on February the 1st. Give some details about that. In the days after the announcement, Bitcoin fell from about 105,000 to around 92,000. Of course, since then, we have seen markets rebound. The crypto markets have tumbled on Trump's other tariffs too. Bitcoin stumbled on February the 9th after the president said he was slapping a 25% tariff on aluminum and steel imports, and again on February the 13th. So these tariff talks are apparently what's getting the market down. Whoops, let me just go back there. So I don't know, guys. Again, the talk is talk. The markets are what they are, and I think we're going to get out of this. Again, Bitcoin as the indicator. Bitcoin is still looking fairly solid, even from a weekly perspective here. We're not really dipping down in a meaningful way. So this is where we're at today. And I mean, you don't have to take my word for it. CryptoCon here posting this. Just had to share this again to show that the short term looks like a bloodbath. And if you guys are looking at the short term only, you might want to zoom out because Guys, the short term, even the 1 hour chart, I only show it on this channel just to give you guys a sense of where the market is at if we've just seen large liquidation events. But really, you should only be looking at the short term charts if you're day trading. Generally, if you're holding long term, daily charts, weekly charts, those are better. In every cycle, though, for Bitcoin and altcoins, there's a point that makes you question reality before everything explodes to the upside. In previous cycles, that was February 2017 and January 2021. How do we know for a fact that this is coming again? We don't, but I've been trusting the cycle since I entered Bitcoin in November of 2022. This cycle, and I won't stop now. Nothing about the red year looks different than other years. It is one thing to look at moves in hindsight and then another to feel them in real time. Altcoins are dead and cycles are dead. Famous last words. So again, guys, when we zoom out, you can see February 2025, we're only here at this point in the cycle. We still have a ways to go. So I wanted to thank CryptoCon for posting that. Also, Marty Party giving more of an explanation. People, we have had a Bitcoin rally since 2023 on no quantitative easing and rate reductions, no liquidity injection, just on institutional entry into ETFs. So another interesting point to note here. There has been no bullish market yet. The altcoin rally and bull market have not even started, he says. Well, I would beg to differ. I think we have started moving up since, we'll call it November, December 2022. That is certainly bullish if you ask me. However, the real pump to the upside, that is still or should be still around the corner. He says, though, wait for the Fed, don't fight the Fed. When the U.S. announces the halt in QT and at the beginning of stimulation and rate reductions, there will be a bull run. Your job is to accumulate now while the FUD campaign is in full force and sentiment is low, and no free money and degenerate gambling. Your exit is at the end of QE, not here. Don't mess this up. Since November the 4th, guys, remember we had a Trump pump and got sold off by exchanges selling their altcoins to pay their fines and bad debts and paper hand retail following them. We're back to pre-November 4th pricing. That's how this works. Remember, every single time a new president gets elected, that is kind of the beginning. That's when we see the euphoria phase start kicking in, and this year is no different. So he's just kind of outlining different Bitcoin halving cycles, looking at the disillusionment phase and the enlightenment phase. And guys, the last one was April 2024, as you guys can see here at the halving. And we are here. So pretty much on track to see that peak performance for Bitcoin eventually. I mean, it is going to come. Luckily, there is bullish news that could get this ball rolling. Like we just heard this crypto briefing bringing this to our attention. NASDAQ files a 19B-4 for a Hedera HBAR spot ETF from Canary Capital.
NASDAQ has filed with the SEC to list a new HBAR spot ETF from Canary Capital. My name is Nova, and this is Crypto Briefing breaking news. NASDAQ is seeking approval to trade shares of the Canary HBAR ETF, tracking HBAR's spot prices. This follows Canary Capital's launch of the first HBAR trust in the U.S. The filing comes as Canary's Litecoin ETF nears potential SEC approval. Canary is also pursuing ETFs for XRP and Solana, expanding its crypto offerings.
So that sounded very AI-ish, did it not? I believe that was AI giving us the news there in that video clip, but wanted to thank Crypto Briefing, of course, for giving us the heads up. Of course, Marty Party, as well as CryptoCon and Watcher Guru as well. So, I mean, as we're starting to see more institutional products for some meaningful cryptocurrencies get off to a good start. I mean, filing for these ETFs definitely shows the potential for these cryptocurrencies and where these institutions think that institutional money will go. Crypto is, of course, an emerging asset class. And, what these companies are trying to do is trying to get their, traditional traders, the big money, maybe older guys, trying to get, to put their investments now into this new emerging technology. And so as we're starting to see companies like Canary and 21 Shares, many others, Grayscale, start to do this more and more, it's really going to paint a picture as to which cryptocurrencies are going to, which cryptocurrencies, at least in their view, hold value and are going to continue to hold value down the road, the ones that are going to see more demand. The reason for this, because obviously they solve problems, people are developing on the blockchain, and they already, in some cases like Ripple, have many partnerships. So wanted to thank Crypto Briefing for letting us know about that. And then, there's, of course, combating the SEC. Luckily, we are winning the fight, guys. This coming from Ian Binns. The Ripple boss has commented on the SEC's surprising decision to drop the Coinbase case. So we talked a little bit about Coinbase yesterday. Ripple CEO Brad Garlinghouse, though, has reacted to the SEC's surprising decision to drop the Coinbase case, claiming that the agency is now moving on quickly from the policies of the previous administration. Here's a quote: "Suffice it to say, as I know there are lots of impatient people, including me, the SEC has demonstrated a clear interest in moving quickly from the failed regulation by enforcement policies to the last administration. As reported by You Today, Coinbase CEO Brian Armstrong announced that the agency would drop the case against the leading U.S. exchange. Notably, the trading platform will not have to pay any, even a symbolic fine or any concessions. So that's interesting news there. Hopefully, we get the same for Ripple. I mean, even Ripple's even said, even if they pay the fine, they'd be fine with that. But Brad's, surprised. He's thinking that maybe we will start to see more. In quick succession, more of these cases get dropped. Attorney Jeremy Hogan was also noting that the case was actually dismissed with prejudice, meaning that it can be refiled at a later date. That's not great. I guess this SEC is not waiting for Atkins. I remember when he mentioned that over there on X to be confirmed before making big crypto moves, he said the other day. Even though the new SEC administration was expected to adopt a much friendlier stance towards crypto, the decision still caught a lot of industry participants by surprise. So is Ripple next? Of course, it's all speculation at this point. John Reed Stark has given his opinion. And he's a former SEC commissioner. This prediction has been echoed by Jeremy Hogan. So, a lot of people are thinking that XRP and Ripple will be next. Jeremy even went as far as saying the other day that he thinks it'll happen before April 16th, which is the deadline for Ripple to file its cross appeal. If you guys didn't catch the video I did on that, I will link that up here in the top right-hand corner. But anyway, want to keep moving along and wanted to thank Ian Binns for posting that. On top of which, guys, we have this case dropped as well. Robinhood, great news coming from Tony Edward. I spoke about this in yesterday's podcast. The SEC has to dismiss the Kraken, Uniswap, and Robinhood cases, or it would be showing favoritism towards Coinbase. So now that they've done it with one, well, they have to do it with more. So he was retweeting out Eleanor Turret's tweet originally. Another rollback by the SEC Enforcement Division, guys. They are closing its investigation in Robinhood. The case has now been closed as the second action against a notable crypto company that the agency has scrapped in recent days. If you guys remember last May, Robinhood received a Wells notice from the SEC indicating that the agency's staff was going to recommend enforcement action against it. The company had faced potential charges of violating securities law through its crypto listings and sales. Under the Biden administration, there was some momentum for cryptocurrency to be considered and regulated as securities, but that is all changed with Donald Trump's administration. Robinhood Crypto always has and will always respect federal securities laws and never allow transactions in securities, says Dan Gallagher, Robinhood's chief legal compliance officer. As we explained to the SEC, any case against Robinhood Crypto would have failed. We appreciate the formal closing of this investigation, and we are happy to see a return to the rule of law and commitment to fairness at the SEC. So, seems like everybody is fairly content with this. It definitely does bode well for the crypto industry and for what could happen coming down the pike. So wanted to thank Tony Edward and Eleanor Turret just for posting that. Meta Lawman even chiming in on this. Just going to finish this off real quick here. SEC closes investigation on Robinhood's crypto business after previously issuing their Wells notice. Again, that happened last May. The post-Gensler SEC appears to finally recognize that most crypto tokens are not securities. And so piggybacking on that theme, we have now heard that the CFTC is likely going to take over, at least in partial capacity, maybe sharing the responsibility with the SEC. We'll see. So we should see dismissals against these cases soon. Ripple, hopefully, for us XRP holders, going to be one of the ones that hopefully happens sooner rather than later. Meta Lawman concluded by saying, the only reason I list Ripple last is the complexity involved in negotiating a resolution. So here's where he thinks they're going to go in order. So Gemini, Kraken, Binance, then Ripple, and then finally the other ones. He says here, Ripple is the only live crypto case with a final judgment in place. So the SEC and Ripple lawyers must negotiate what to do about the judgment and money escrowed for that final judgment. And he does say here that does generally take time. So who knows, guys? Hopefully we get it sooner rather than later. I mean, Jeremy Hogan's saying before April. It's already February the 25th if you guys are watching this video on the day that I'm recording it. Of course, this positive news is definitely not going to hurt XRP price, at least. Vincent Van Code here posting this breaking news. XRP Ripple used by major bank to provide crypto and custody services. So the Ripple's official Twitter account did just post this, that DekaBank is rolling out crypto trading and custody services for institutions built on Ripple custody. So this is brand new news, a clear sign of growing demand for institutional grade crypto custody solutions, meaning the big boys are playing ball and now they need a custody solution. So DekaBank, a German investment bank with 377 billion euros in assets under management, introduced crypto trading and custody services for institutional clients almost after 2 years of development. So they've been working on this for a while. The Frankfurt-based company's move follows regulatory approval from the crypto custody license from the Federal Financial Supervisory Authority, while operating under the supervision of the European Central Bank. So they're under the supervision of the ECB. So we have the necessary experience, this is a quote, required licenses and attested, ready to use infrastructure to support savings banks and our institutional clients. That's what a board member here told Bloomberg. DekaBank, the asset manager of the country's largest financial services group, is marketing its new offering with a focus on security and regulatory compliance. According to the report, other crypto offerings in the country's broader savings bank sector have already been introduced. Financial institutions such as Landsbank Baden-Württemberg, I butchered that, I'm sure, have partnered with crypto platforms like Bitpanda to allow corporate clients to buy and sell cryptocurrencies. So they're already integrated here, but guys, now they're using a Ripple custody product. And Vincent Van Code here commenting, I've always held the opinion that the banks will offer crypto deposit accounts much like fiat. They will offer trading and desk swaps, yields, leveraging, you name it. Holding on to your high-quality utility tokens is the only action now. Keep grinding at work for the next few years. Preserve and don't touch your tokens if you can. And just wait. And again, for more information on what I'm doing with my, I do hold utility tokens. I do hold a large quantity of XRP. You can follow me at patreon.com/workingmoneychannel. I do have a strategy. I am going to be holding some of my XRP for the long term. But, everybody's got their own plan. Nevertheless, not financial advice. He says this is just what I'm doing. Of course, dabbling in some bot trading also to pass the time. Guys, this is not a small bank, as echoed here by Anders. 377 billion euros under management. I wonder if it's related to MiCA now being in full force since the new year. Another interesting question. Look at how many banks are using this custody service. So Ripple custody list includes Forge, BBVA, DZ Bank, DekaBank, which we just named, VP Bank, BCB Group, Archax, TOG, Union Bank, DBS, Zodia Custody, Rule Match, VDX, and Go FinTech. Not a small bank by any means. Now they're opening up to the German market, ready to use infrastructure to support banks and institutional clients. Look at that, guys, directly from this report, a screen grab here, another one courtesy of Chad Steingraber. We have the necessary experience, required licenses, and a tested, ready-to-use infrastructure to support savings banks and our institutional clients. This is not retail facing, guys. This is for the institutional money to flow in. They're not messing around. This is not a small bank. They're expecting big money to come in. It's just now a question of when. And for more information on what I'm doing this bull run, you can follow me at patreon.com/workingmoneychannel. But please subscribe to this channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.